Good morning. It is 8:47 a.m. Eastern Time, and today we have the CPI report come out. By the way, it's April 13th, and I'm Rich Paz for Critical Point. The CPI report came out, and it was stronger than I anticipated. I thought because the model is bullish, the stock market, over the next couple of weeks and even farther out, I just felt like either the report doesn't matter or the model's actually forecasting that the CPI report either wouldn't matter or it's actually going to be bullish, meaning it would come under trade guess. Well, I guess trade guess was 0.5% for March, and CPI come in at 0.6%. And they were guessing 2.5% year on year, and it looks like that's now coming in, I forget now what I saw, 2.6, 2.7. So it is stronger, inflation is stronger relative to CPI than what the polls were suggesting. And I thought that might cause a problem for the market. Well, I think earlier this morning, the market took a quick little dive off of news of Johnson & Johnson vaccine might be put on hold by the government. They're worried over some blood clotting. I just had the J&J vaccine on Friday, and so far really haven't noticed much of anything from it. And but I did hear people passing out, and certainly there's been some news of some clotting here. So the market didn't like that, and it kind of upset it a little bit. Now the market's coming back, even with this higher percent CPI, higher inflation. So I think there's a good possibility. In fact, I'll go ahead and call this an alert. I'm calling a level 3 bottom in place, and that type of bottom occurs once or twice a month or so. And I think this means that as the market makes a new high, takes out this the high of this week for at least the futures, if not cash, if cash high was higher last week, then if it takes out that high, bottom line is, if it does that this week, I think we'll see still higher prices next week. Next week and the following week, we want to look for another level 3 top, and that's when we want to look also for something more important as a level 2. And we'll update you that not only in the morning briefs, but we will send out alerts to subscribers only. But we're also going to obviously update on the weekly update, which is the most important podcast that you want to watch. Because we discuss everything from very short term to very long term in the markets, as well as look at the outside markets, interest rates, gold, Bitcoin, dollar, energy, variety of things. We discuss the economy, okay? And then we have separate videos where we'll look at some of the global stock markets, and I'm now getting into some of the U.S. sectors of whether or not we can add some value there, where you can find a sector that's going to outperform the stock market and give you a little added boost. At any rate, what I'm saying this morning, until there's a violation of today's current low, I think we want to consider they're going to continue to buy over the next week or two, and all of this somehow tucks into our long-term bull market scenario, okay? So to me, I'm still a bit concerned of the higher CPI, higher interest rate, but it's looking like the market is shrugging that off, and I want to see that, okay? And again, as if it moves to a new high this week, that would also help increase odds we are on our way for this next level 3 swing. But again, we're going to have some larger downswings sometime, now into summer, and the model's already showing us when that is about to occur. So keep that in mind, and if you're not a subscriber, to make sense of this, subscribe, pay up, and follow it, give it a try. I think you're going to find you're going to need it throughout your investment years. And the reason is this model is explaining and labeling and cataloging practically all fluctuation that you see during the day, during the week, during the month, during the year, during a decade. It's just fascinating what it provides for us for information on how long will they buy before they're going to turn around and sell. It's pretty much saying there's no such thing as actual magic price levels. That's a sell. You have to know when it is time, actual time, for them to say, we've bought enough, we've got to sell something here. And then this can also be clues for how the news cycle will fluctuate, as well as clues for the fundamentals. And we find there's repetitive patterns, there's timing to when this news comes out. And of course, we know there's reports that are regularly scheduled. They are on a calendar, okay? And that fits into this modeling as well. At any rate, here's a thumbs up on the stock market. I think it's going to move higher from here, but we will have to reevaluate if the market takes out today's low, especially if it actually closes sharply lower. We will have to reevaluate, make some adjustments. But for the moment, I think we got a level 3 bottom, and so for the short-term, the very short-term trader, in theory, it's a buy here. But again, manage your risk relative to analysis of others and your own, and keep in mind past results are not necessarily indicative of future results. But as of this morning, I like what I see. They may change their mind later in the day once they're done with this inflation report, and they may still be concerned over the Johnson & Johnson vaccine. But I view all these right at the moment as just very short-term factors. I think ultimately the economy is still growing. I think this strong inflation number is not strong enough for the Fed to actually raise rates. I don't think that they've already said they probably won't raise rates this year, and they believe inflation will be back down some next year. That's in my model as well. I came with it on my own. I did not copy them. I'm saying inflation will be back down. I'm saying we can make too big a deal out of inflation, and I'm saying I think at the moment the stock market may be smart enough to understand that. So also keep an eye on interest rates. If interest rates surge, maybe that's going to cause some problems to the stock market. But right at the moment, I think the stock market has an understanding, you know what? If the economy is going to grow for years to come, interest rates are going to go higher, but history says the stock market doesn't go down during that time. Why would it go down? The companies are making money. They're moving forward. So you're going to buy stocks anyway. So they're trying to figure out how do you live with higher inflation, higher interest rates, and then how do you deal with what's really going to be noise and distractions of when inflation and interest rates surge and not get thrown off your long-term bullish scenario. Thank you and have a great day.